Welcome, everyone. This is Joseph Infante. Today I have the pleasure of speaking with Rick Elmendorf, who's one of the leading mortgage specialists, not only in Virginia, but in the entire country. He was ranked 28th in the nation last year. He's in Northern Virginia. That's his territory, so to speak. And today he's going to talk to us about some of the pitfalls to avoid when you're looking for a mortgage, and also some advice to realtors who sometimes also run into some issues because they don't understand the process as well as you may think. Rick, welcome.
Thanks for having me. It's a good segue to what you just said there as far as pitfalls. I mean, there's a lot of advice out there circulating in the markets, but you know, I guess it's funny. I'm just looking at myself. I'm like, my gosh, Rick, you're so old right now. I like no hair, and I guess 20 years in this business does that to you, right? But you know, I guess I've learned a little bit. You know, this is not the market we lived in, you know, 10 years ago, where you could just draw blood and get a mortgage. It's you know, the market's changed quite a bit, and you know, there are a lot of pitfalls. And I'm actually in the process of writing an article about 4 easy ways to mess up your next real estate transaction. So bluntly put, and so advice to buyers, prospective buyers, and real estate agents alike, because like the market has completely changed. Probably the first step I would say is, and this is going to sound so, everybody says get pre-approved first, but you know, the first way to completely mess up your real estate transaction is to not talk to a lender first. I mean, that sounds so, you know, elementary, but it's true. I mean, a good lender is going to be able to best advise you of what steps to take. I mean, like I said, the market has changed substantially. I mean, it's not just going in there and giving your name and social anymore and having good credit and know I've got money in the bank. It's not that way at all. There's a lot of pitfalls that people just don't realize. Also, from a real estate side, I mean, if you're a real estate agent and you're just saying, hey, I don't really care which lender you talk to, just go with whoever gives you the best rate. I mean, there's a reason people shop at Target and there's people shop at Bloomingdale's or Nordstrom's. I mean, there's a difference, and I don't mean to say that, hey, great loan officers are gonna cost more money, and then bad loan officers are gonna be really cheap like somebody else. It is not really that way. What I'm saying is that a really good loan officer who's been in the business for a while is going to be able to give good advice to avoid the pitfalls a borrower is going to have. And I mean, if you're a real estate agent watching this right now, I mean, how many transactions have been going sideways come the week of closing? I mean, it just happens. So, I mean, those things are going to be avoided by just having your buyer talk to your lender or just talking to a good, experienced lender that's been in the business a while. And the other thing that, just from the realtor standpoint, is that you know, your lender really does play a large part in the transaction nowadays. I mean, they should be giving you that third-party endorsement, you know, to help you keep that client. I mean, just everybody being on the same page is really important nowadays in a real estate transaction. So that'd be kind of the first thing. Talk to your lender. And by the way, Joseph, please tell me to shut up because I tend to just ramble.
No, that's fine. This is all great information. Just on the point is, could you elaborate a little bit of what are some of the fundamental things that have shifted since 10 years ago, when, let's say, there was the lending boom, the real estate boom, etc.?
Yeah, I mean, the market completely collapsed in 2007. When I came back to the old Countrywide Home Loans, I was brought back to one of the things I was doing was setting up real estate agents to handle our growing concern of foreclosures. I mean, the whole market, once the foreclosures just blew up the real estate industry and people were losing their jobs and people were in these weird adjustable rate mortgages, and it just caused an absolute financial crisis. And because of the financial crisis, I won't get too detailed in this, but basically lenders restricted and got a lot more tight, and they just really overdid it, how they were looking at borrowers from a qualification standpoint. I guess that common sense has gone out the window in a lot of places, and it's about the shift. The main shift is there is no more common sense. It's like, if you don't meet these requirements, if now the old qualified mortgage, if you've heard that term of this year, if you don't meet these ratios, then you're not a qualified mortgage. So most banks are going to look at you cross-eyed. And getting even to that qualified mortgage, you think, hey, well, I'm totally qualified. I have under a 43 back ratio. But I mean, how is a bank really looking at your income? Have you moved money around? I mean, just little stupid things like deposits and moving money. Most people don't realize that 3 days prior to closing, most every single lender in the country right now is doing a soft credit refresh. So it's like if you charge extra money on your credit cards or you've brought on a new debt, you've just blown your closing date. So it's like it's the whole industry has changed to make this process a quasi nightmare to the borrower if you're not properly prepared. I hope that kind of answers your question. There's
Sure.
way too much that's changed to really even go into it here, but just mainly from the restrictions that the lenders have to the borrowers and what they can do, and just the pain it causes a lot of borrowers.
So what would be now point two? Obviously, number one was speak to a lender. What's tip number two?
Yeah, I wrote down that one of the ways to blow up a real estate transaction is to write contracts for buyers that are just pre-approved. This goes for the buyer too. You think, well, I'm pre-approved. I mean, everybody's pre-approved. You talk with me for 5 minutes, and I can have you pre-approved. But that's not really what people are looking for nowadays. We have a program right now that I call Offer Accepted. So I do this with all my buyers, and one of the purposes is that we call on every contract a listing agent. If they're good, they're going to call the lender. You know what the first question they ask the lender? Have you seen and verified all of the income and asset documentation of the borrower? What's their credit score, and have they been through underwriting? That's the question. And I'll tell you right now, most loan officers are just lying through their teeth and say, absolutely, no problem. They're great, been through everything, no problem. But most aren't even having that conversation. And I'll tell you, that is such a huge portion, is that you have to be more than pre-approved in this market. It's a must. You have to have given your lender all the income and assets, have it run through underwriting. I mean, I'm very, very fortunate to have all of my processing and underwriting and closing done in-house, which is huge, which means I can do those sorts of things. But if your bank or lender can't do that, then that's going to put you at a severe disadvantage when you buy a house and you're in the offer stage.
Understood. And you're finding that what percentage of buyers run into this situation where they're in theory pre-approved, but really they're not. They're far from that.
I'd have to say it's in the 90 percentile range.
Is that a big chunk of the market?
It's a huge chunk of the market, and listing agents know this, which is why they're making the phone calls, and they're still having loan officers lying to them. and as a buyer, you're putting yourself at a disadvantage, because there could be things that pop up that a lender could quickly fix. It could be a benefit to you. Your credit score could be 723. You know that your credit score, if it's 740, you get an extra quarter in price. 760 is even better. So there's little things that we can do to fix things if a lender is brought in with the full package up front. It's just a huge, huge thing.
Understood. So what would be now pitfall number 3, so to speak?
Pitfall number 3 is don't get your lender involved in the contract negotiation. Now, this may sound like weird, and the realtor is probably going to sit there on the other side going, Rick, you're crazy. I'm not getting you involved in my contract negotiation. That's not happening. But the reality of it is, pursuant to my point number 2, I am involved already. It doesn't matter. They're calling me. So whether I'm involved or not, I'm going to be involved. So what I like to do is to take a very, I like to take an approach where I'm actually reaching out before that listing agent calls me. Because what happens if you got 8 offers and I'm making a phone call to the listing agent and they hear my name and they've got my buyer's name and the address that we're calling on? Well, guess what? Let me find that offer, Rick. Yep, okay, puts it right on the top of the pile. I just check. I talk to that lender. You know what? He called me back on a Sunday, or he called me on a Saturday because I knew they were making that offer. I mean, yes, I'm involved now in the contract negotiation stage. I can say, hey, this borrower has been fully vetted by my underwriting. This borrower, we do some guarantees as well for closing, but yeah, you have to get the lender proactively involved in your real estate negotiations. I'm sorry, it's just the way it really should be. It's worked out much better for my clients.
Okay, and in terms of what would you say is the fourth and last pitfall that realtors slash buyers are facing?
Okay, I'm looking down at my pad of paper because, like I said, I haven't written this article yet. But my last one, I think I've scratched that a few times because I'm going to sound a little bit terse when I say this. But you know, the fourth way to torture real estate transaction is to do business with an out-of-state lender or credit union. Now, I'm sorry, you poor credit unions out there, or people that just love their credit union. If you're doing business with a credit union or an out-of-state lender, you're putting yourself at a severe disadvantage. First and foremost, listing agents don't like credit unions, and they don't like out-of-state lenders. Why? Well, A, they can't control them. And secondly, closing dates get missed all the time. Listing agents don't like to miss closing dates, I promise you, because they look bad to their sellers. Their sellers don't like it either. So, and I promise that your realtor probably doesn't like you using a credit union either. And I'll give you a little bit of story. I have been a member of a credit union since I was like 2 years old. Well, my dad was military, so I had one of the military ones, so people know who that is. I bought a house, and I figured, hey, I got 90 days, right? I'll use my credit union to buy this house. This was years ago, but honestly, they took up until the week of closing just to start working on my file. And my money wasn't even there at closing. And I don't say that as my personal experience, but I've seen it happen many, many times before, that just the closing date doesn't really mean anything to a lot of people that aren't local, that you can't come wrap your arms around. So being local and being with a mortgage banker who has stuff happening in-house, or that at least has the facilities to act like a real mortgage banker, makes all the difference in the world. So yeah, don't use out-of-state people, even if the rate's better. I mean, don't use credit unions, even if the rate's better. I mean, when you, again, forgive me for going off on tangents here, but when you get into a real estate transaction, when you're buying a house, what is the first thing that's important to you? Is it your interest rate? No. It's, I really want that house. I really want my offer accepted. But then buyers think and realtors think, okay, now that I'm under contract, let's go shop for a mortgage. Let's go now find the best rate. But what is quickly lost is that the first thing still is, I want that house, right? And if you choose the wrong lender, if you get in working with the wrong people that don't close your loan on time, you don't have your house, because you may be in default and you may lose that. So anyway, again, probably going a little bit overboard with this point here, but I just feel pretty strongly about using somebody local.
I mean, it's actually very powerful advice, and these are sort of these nuances that I think both realtors and buyers are probably overlooking, and that's why we have you to sort of give people some perspective. But Rick, before we sign off here, why don't you tell people how they can get in touch with you? Tell them, obviously repeat your name, telephone number, email address, your company, etc.
Sure. Probably the best way to get a hold of me is my phone number. It's 571-249-5363. And I have my website is loanwithrick.com. So that's the best way to get a hold of me.
Well, wonderful. Again, Rick Elmendorf, 571-249-5363, and give him a call. He's an expert at what he does. He's one of the top in the country, and certainly the top in Northern Virginia. So thanks again, Rick, and we'll speak to you very soon.
Alrighty. Thanks a lot, Joseph.
You.
Bye-bye.
Bye for now.